Hey guys, FarmD here. I said I would do a quick video for the Substack subscribers, and also did say that I would go ahead and do this free for everybody tonight. Just talking a little bit about some of the conflict today early in the session and how, I had a long setup and a short setup, which I try to always have. And they sort of both played out at the same time, which was super interesting to me. So backing up to the overnight, we had provided last night the levels to be coming into Monday. And we had this cluster of levels, 53 3/4 up to 57 1/4. We had 2 consecutive days value area high, and then a previous week, the prior week's low, prior to last week's anyways, low, sitting just above. So to me, when you have a cluster of levels like that, it's best to pay attention. So sure enough, we gap up on the news that there's no government shutdown, which, I don't know, kind of sounded bullish to me if they did. But we gap up and we tag 54, I think exactly. So right at that 53.75 spot, we come straight down to 38, which was the next level that I had provided. And then we just sort of channel, 38 ping pong back up to 54-ish. And I know a number of you, basically just hit the reverse button all night, which is fantastic. Great trade. I did not trade. I said I wasn't going to, and I do try to stick to that when I make a decision. So something to keep in mind with like early Globex, early Asia session, especially back in here. I mean, Asia hasn't even had their second cup of coffee, and they're still sitting on the toilet. So there's not like a whole lot of volume that goes on here. This profile looks nice, but a lot of that is a result of the later European session volume as well. So these kind of moves are pretty readily undone by the Euros, and they're kind of dicks like that. They'll run your stops, they'll reverse what you've done all night, so it does make it really kind of hard to hold a position through Asia and the European session and then wake up happy and green and not having been stopped out. But anyways, on this last test of this 54 range, I thought it was kind of funny because on Twitter there's a couple of gurus that were, right on this break of 53.75. We've got a new high of the session. They're all of a sudden bullish. 45.60's coming, max long, And, I posted, we know it's above there, for subscribers. We're not in the clear yet until we're bidding really 57 on a pullback from above. That probably puts a lot of pressure on that big seller that was sitting in the 65s to 70s. So we knew that this was nothing here. We weren't bullish here. It actually tagged Friday's value area high. Perfect. I think maybe to the tick, actually. And then you can see just straight selling from there. Nice lower highs here. And then the Euros just sold straight down to Friday's close and Friday's point of control. So naturally you get a little bit of a stall there and then some further liquidation. And I believe this is roughly where I posted my morning update and posted the potential long setup and the potential short setup that would play out. And I think it's important to talk about, why am I posting a long setup? I mean, we're just headed straight down. Everything's clearly going to zero. Price is going down. I want to short it. And, that's sort of a trap that a lot of people will fall into sometimes and get in trouble. Sure, as a general rule, if price is going up, you want to be long. Price is going down, you want to be short. But there's a lot more to figure and factor into that before sort of making that decision to just go ahead and chase a trend. So true higher time frame participants are sellers. The monthly is red, the quarterly closed red, and we were certainly selling off overnight. So that's certainly bearish. But on a daily perspective, we really had been balancing roughly between 4,300 and 4,365-ish. We had an excursion up into the 70s. We had 43.70s. We had an excursion down to the 42.70s that was snapped up pretty quick. And really most of the bottom of value for that range had been in this low 4,300. So I called it 42.98 to 43.04. We had a couple of days value area low sitting right in that range. It was clearly sort of the bottom of value for this recent balance. On top of that, to me, inventory, I would have categorized it as more short than most traders would. And what inventory means is just the positioning of traders overnight. And so general rule is if you're trading below the regular trading hours close from the prior day, then inventory is probably somewhat short. If you're trading above, inventory is, maybe somewhat long. And in this case, even though we were only, 5 to 9 points below Friday's close at the time of my morning update, I sort of also look at like what the European session had done, and it was just straight down. So I mean, tell me who's long this drop here that hasn't puked already. So clearly, to me, participants are very short. Now, when we are trading in a multi-day balance and we're gapping down into the bottom of that balance and inventory is extremely short, I'm definitely considering taking a long for this counter trend pop because I think I can get 10 or 15 points or something. So let's go ahead and go over that and why that is. So from a recent balance perspective, if we are gapping down into the low of the balance, it makes perfect sense to expect both some covers from any seller who might have been trapped selling higher, and it also makes sense to have some responsive initiative buyers coming in, deeming this to be the low of value for this recent balance. So that makes sense. And then additionally, if pretty much everybody is max short, there's going to be some profit taking that occurs. And again, all the longs are washed out, so maybe you get some fresh longs and they want to take a shot. And so that's really, to me, where an inventory correction comes from. So with that, I had posted the potential long setup was what I call a value traverse play. Well, not just me. There's plenty of other traders that call out this play, which is effectively, you look below value for the prior day's session and you fail, and then you consolidate back within value of the prior day. So from there, you're targeting the prior day's point of control and then the prior day's value area high. So that's part of where the 26 target, the 43.26 target came in as first target, and then maybe runners. I felt like this 38 level was an important enough level. It was not the value area high from Friday. That was up here at 54, but it was a big enough level that was clearly a spot where we needed to take some profit. So let's quickly finish on how that long setup played out before we get into the short setup, even though they were kind of playing out at the same time. So overnight, again, you had this distribution here, and it was kind of the market to go ahead and produce a distribution right at my key level of 38. So clearly you have some trapped longs in here anyways. I don't consider it to be a ton of supply, again, given the early Asia session pump here. They're not putting in a whole lot of volume relative to the Europeans, and certainly not relative to the type of volume that we're putting in during regular trading hours. But the look below and fail, it plays out. I do know a number of people that just took this straight to 26 for 15 points and done for the day, and I really think that's a great trade because, again, you've got some conflict because higher time frames are a bit bearish. Certainly the overnight action was a bit bearish. If you're going to take that inventory correction long, you want to go ahead and get out, or at least get some trimmed, right? So if you want to trim 26, reload 11 to 15, which was that range we had talked about. 15 was just such a sticky spot from all the transactions that took place with those icebergs. Composite volume point of control for 2 days, I believe. Very, very sticky spot. So if you want to refresh your long, you long in here, you take half off at 26, you come back here and you add it back, you take some off at 26, and you want to play this chop and that's your style, that's completely fine. It's not really my thing. To me, I'm just taking this, in size, and taking most off at 26 and maybe leaving some runners and see what I get. See if I can get that 38 spot, which ultimately did end up playing out. Now it's important to look at something here, and I'm going to go ahead and pause and add a fixed range volume profile for just a portion of the day, which you've probably seen me do just a few times. So I've drawn this profile on here from the cash open up until this last candle at 11:15 Eastern, where we then ultimately did break above 26. And so you can use this to both manage your long and to consider flipping short, because the bearish setup that I had posted was that if we could not establish value above 26, then I expected to test 42.98 to 43.04, which ultimately happened. So from the management of a long perspective, if you are taking this value area traverse play, especially once it plays out again during RTH, that's a fantastic setup. I like it even more than the overnight. And you want to take this trade again, for another 15 with runners. That ended up being perfect when you got the clean test during RTH and the sweep of Friday's lows and value area low. That was fantastic. But to me, I'm looking at my volume profile. So this is what it looked like at the time. So this is what we're looking at. It looks very different now at the close, of course. So if you're doing a session volume profile, you're not seeing this. And that's one of the reasons I like the fixed range. So at the time, the value area high for the day was sitting just under 26 and a half, Friday's point of control and close. So to me, we're going to be a little bit careful. So sure, we got 38. We're definitely taking some off there no matter what. And then it's possible that we balance 26 to 38, and then we complete the value area traverse up to 54. But we're definitely going to be careful. I had also posted on Twitter, we now have establishment of the initial balance, which is the first 60 minutes. We had the high up here around that 32 range. We had the low down here around 10. And so if you trade above that and then fail back within the range, that's a good look above and fail setup that I had posted. So again, if you're long, your trailing stops sort of just under the initial balance high at the point at which you've trimmed 38. You're probably stopping on your runners. Let's go ahead and call it 30 or 32. If you don't keep it tight, like just below the IB high, sometimes you got to give it just a little bit of room. But so to me, the failure to establish value, even though we spent some price up here, some time with price, we didn't establish value above 26. I'm just being careful. I'm not saying that you need to short this, but I'm just being careful if I'm long, first and foremost. If you do choose to short this 38 because you say, well, SPX 4300 is up there, it's a farm D level, I'm going to go ahead and short it. I think that's probably okay if you're keeping it tight on your stop. It's better to see if you can get acceptance back into this initial balance. And unfortunately, if you waited, you didn't really get anything because we just liquidated straight down. So there wasn't really an opportunity, and you kind of had to be in or you kind of had to chase it, unfortunately. But again, that's sort of where the bearish setup ended up fully playing out. You have the combination of the fact that you have failed to establish value above 26, you've traded into the key level 38, and now you have a look above and fail of the initial balance high, and we liquidate all the way down below the initial balance low and into that spot where we said we were going to be aggressively managing our short positions. So those were sort of the two setups that played out actually at the same time. Even while you're long for that inventory correction, you're long for the value area traverse, you're aware that 38 is a monster spot. You're also aware that we have failed to establish value above 26. So you're managing those longs carefully. You're avoiding just playing chop here, unless you're a sniper and you're just sniping, 11 to 26 over and over again. That's fine, but it's very easy if that's not you to get chopped up here. So sometimes better to have a setup into the open. It's very specific and it's actionable. Just take your money and run and potentially be done for the day. You can wait for a second trade. There's often like 2 good trades during a day, sometimes 3, but don't force it. Just let the trade come to you, and that's usually what I advise, and that's why I try to post a couple of setups before the open that can work for you. And that's all I wanted to talk about, guys, tonight. Thanks.